Hello, welcome to Dissident Canada. My name is Tyler. Today, I'm going to talk about global macro finance because it's really, really important. And more importantly, people are coming around to what I've been saying on at least the Green channel that I've been posting to for like over a year now and been posting about on X for longer than that. At least on the Dissident Canada account, that, hey, the economy is clearly not doing well, and there is no indication of anything good on the horizon. It is all building towards a macro event, the likes of '08. Now, when people say that, they make the assumption that you are saying, oh, we're going to have another '08. And it's kind of, it's what I'm saying is a possibility. It will be different, but similar. Whether or not markets react does not matter when you have very similar real economic factors. You've got, you are now starting to see the big layoffs that you saw in the lead up to '08. You're starting to see the same banking problems of banks just not loaning out money unless it's to very specific um, evergreen companies. Uh, when banks stopped in 2023 ish, right around the banking crisis that happened there, they stopped for a little bit of lending to hedge funds, and the Eurozollar banks, the shadow banking network, picked up the slack there and has been doing that, but they can only do that for so long. Banks are scared shitless of basically everything at the moment. So they have once again started stacking uh, certain government bonds, specifically US dollar bonds, is which you want to stack. You have globally synchronized bond yields other than American at the long end of the curve going up, which that is a premium risk that you are taking with the long end of the curve because you're projecting so far out. It's not a very useful financial asset. For safety, you see piling into the, say, middle bit of the curve. um like, I bring this up because, one, it's the second full on cycle of post '08. '08 was the first secular point of the new, what will become most likely the new euro dollar norm. Is you have, like, basically trading sideways, 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 and slightly down for a long period of time, say a decade or so. Then you hit, and then banks start freaking out. You have a down, and then sideways, 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 down, sideways, sideways. Like, the exact, it's going to keep revolving in that secular nature. And the reason why I say sideways and down is, if you look in real terms, like, you don't look at markets, you look at, say, uh, purchasing power, jobs, and income, specifically jobs and income. We never recovered from '08. Jobs are still down, incomes are still down, and even if you look at um, projected where the market would have been, all right, at the current time period, if we had continued on the prior established growth before '08, we are still well below that. And we keep going farther and farther away. So this new secular nature of, oh, uh, sideways, down, false recovery, but really more sideways and down. Oh, we hit another event, down. Like, that's the new cycle. How long it lasts, I don't know. And if markets react the same way it does in '08, I don't know if, say, the US market specifically will have a crash like event. It would, it makes sense that it would, but it also makes sense that it wouldn't, because the US market is unique in that it is a US dollar market where assets are priced in dollars. What that really means is, because there's so much outstanding US dollar debt outside of the United States, when you get into a time period where, like now, liquidity, or in other words, money doesn't flow correctly, so you can't get your hands on the dollars you need to A, operate, and B, service your debt, what do you do? Well, you should pile in to US dollar assets. So in the likely event something happens, you have something to sell to get dollars, so you don't run into a problem. Banks have been doing this for the last couple years of buying up dollar assets. Hence why you have, you know, in the United States, you have like ridiculous price to earnings ratios uh, in US markets. Like, it's just ridiculous. Even the lower end of the S&P 500 is still ridiculously high. It's just when you get to like the top 3, you're looking at well over what is it, a 23x multiplier. It's like, how? Like, specifically, I think of Nvidia. I understand there's an AI bubble going on right now, but the amount of value that Nvidia produces versus, the bubble like nature of AI, because it's going to collapse under a whole lot of pressures, most of it being there's no return on money. Like, the companies need more and more money going in than they can ever bring out. Like, nobody's monetized AI correctly. It's why LLMs are going to crash. Like, large language models are just terrible to even think of as AI, because at best they are just predictive text. They have no reason capability. Um, so they can't evaluate data whatsoever. So all their conclusions are highly suspect. It's just based on, again, model training, which is, hey, this is good, that's bad. And then the AI is like, oh, okay, this source is an authoritative source, so therefore anything from them is true. It has no capability of evaluating the data for itself. It has humans do it. So there's inherent biases in there, especially with how left wing all the companies are. So, like, AI just gives you garbly gook bullshit. Like, when you really, really drill down, you have to train it yourself to get right answers. I've said this multiple times. Um, anyway, like, Nvidia is ridiculously overvalued. They make basically 2 products. They make really, really nice advanced um, graphics processing units, or GPUs, or graphics cards. Um, some situated for AI, some not. Like, whatever. So that's one side of the business. The other side of the business is they actually have like full integrated um, compute units, where you've got like, it's not just a GPU, it's like a full on computer, and it's a smaller section of the business, but I believe right now they're ramping up to do like fully integrated AI boards that not only have GPUs, they also have the other parts of the computer that you need to operate. It's very much they're very much copying ARM in that uh, instance, but like it's still a ridiculous valuation. They may have the best AI cards you can buy, but if you look at again AI returns, this is very reminiscent of the .com bubble with AI, is what I'm getting at, and like every other bubble ever. But Nvidia just takes it to a new level because once the AI bubble pops, all they have to fall back on is like, hey, we're going to sell GPUs to, you know, gamers, which is going to be, say 12 to 13% of our market share. Um, and, the rest of it's going to be like enterprise data center stuff where like, hey, this company needs a lot of parallel processing power, so you just run it through like 50 GPUs and it crunches data faster than ever. Like, you know if you work in the sciences and you're working on large data sets and you need to factor all that data, uh, Nvidia sells like a $60,000 uh, computer unit that just does it, and it's just like that's really expensive. But like it takes like when you're dealing with like genome stuff and other like large ass data sets like physics and stuff, it takes stuff from like, oh, this would take years on like your average um computer enterprise computer to like, oh, we can do this in like a week or so. Like they're that insanely powerful, but like super freaking expensive. And they don't sell very many of them. Like most companies kind of have a they don't buy directly from Nvidia. They'll like there's a system integrator that builds what they want, specifically what they want. So it's to their needs, and there's a price premium, but it's still cheaper than buying like, hey, this is $60,000 from Nvidia. It may only be 40, but like when you buy at volume, like that kind of matters. Anyways, uh, the cyclical nature, like I am seeing, I'm spending a little too much time on X, but like there's several posts just like in the last 24 hours since the last time I recorded, right? Of like, hey, Lutnick has come out and said if a company needs help, Trump will consider government stake, like with the Intel thing. So, in other words, the market hasn't crashed yet, and we're already talking about bailouts. But we're not calling them bailouts because we can't say the word bailout because there is such a visceral reaction to that word from my generation who saw that it gutted our parents' livelihoods in '08. Like, I still viscerally remember all that shit. Um, then I've seen like people talking about government debt nonstop, being specifically Canadian government debt, being like, oh, Canadians are at some point soon, all your tax dollars is going to go back to paying government, to paying the debt off, and it's like, no, that's not how it works. To break that down into that because it's a really complicated topic, uh, the government taxes you every week or bi-weekly, whenever your paycheck is, they take a chunk. They do monthly with corporations and so because they have their monthly stuff, and then quarterly as well. They do checkups. They do their taxes because that shit's important. So the way servicing government debt is, yes, some of that weekly, bi-weekly, and monthly and quarterly money goes to servicing the debt, but for the most part, that shit is reliable revenue for them, so that's used to pay their people and other, those reoccurring costs that are constantly there. What they do with debt is they roll it over, which basically means they just go and issue more debt to pay off the debt, which is why you have ballooning all over the world, ballooning government debt problems. Does that matter? Yes. I talk about it all the time. It creates a wealth siphon. Okay? That's a big problem. But it is, for the most part, a sustainable problem because banks are scared shitless, and same with passive funds such as pensions are also, the people in the knowledge are also scared shitless, so they buy a larger than required amount by law of government bonds, which makes that fairly sustainable. Now, the numbers are probably at some point in the next, say, 20 to 30 years on yields are going to spike like there's no tomorrow. Because there's going to be eventually a price premium, but it's not going to be as large as people think. It's not like in 20 years, you're going to have a 25% price premium on government yields. That's probably not likely to happen. And it's, again, because of the way debt-based economies work. You need more and more debt. So asset prices eventually balloon like there's no tomorrow. They just go, which we've seen. So what that means is, by law, the minimum amount, because it's percentage based, of like passive investors, the pensions, and banks, the amount they're required by law to have of bonds just like exponentially grows. So that's kind of sustainable. Whoever set that up, kind of smart. All right. And then I'm seeing more and more posts specifically on X from multiple people, but I'm just going to point out one who is a Canadian at Table Salt 13, goes by Table Salt. The post I'm looking at is just, okay, I'm hearing a lot of people who are being laid off in Canada this week. Something is going on and I don't like it. And my response is, yes, this is a globally synchronized macro event that is growing in the background, that has been growing for years. And like, basically when I say years, I mean since 08. Like, again, the cycle that I was talking about at the beginning. And as I'm recording this, George Gammon is doing a live about a new Fed stealth bank bailout, which I wonder what that could be in detail. I'll probably go watch that after this. But like, you can just see the exact same things playing out over and over in country after country. And like, there's a lot of people here in Canada, at least on the online commentary space, who just zoom in on Canada, focus on Canada, and are like, it's Carney's fault. Meanwhile, here I am, focused on macro, being like, sure, it's Carney's fault. UK, France, Germany, Japan, even the United States. I talked about this the other day. You cannot claim it is 100% Carney's fault. Does he have something to blame? Absolutely. And like, if you look at immigration, all right, globally, immigration is a massive problem. The only ones doing something different is the United States. It's going to cause a whole bunch of its own problems in the United States. It'll probably work out good. But the reason in Canada why they've accelerated mass immigration plans is because they are trying to juice GDP numbers. You can see this every time even prior to when GDP was a thing. When you have mass immigration events directed by the government, it is always an attempt to stimulate the economy. It is a stimulus package that is as effective as other stimulus packages that have been tried. A really, really good example of this is Rome. Okay? In the early Republic, the reason why the Romans kept on fighting wars, and even if they lost, they went back and they fought more and just kept hitting the enemy until they won, is because of slaves. If you look at modern mass immigration, is the mass immigrants are very akin to indentured servants. All right. I don't really want to go into all the details, but like you have, passport theft, uh, wage siphoning, a percentage, all that crazy stuff that you have seen in previous times this has happened. It's always disgusting. It's always wrong, and we need to stop it. Okay, but it still juices. It's very much like steroids. It builds muscle, and you are technically stronger, and you did do the work, but like, are they as functional muscles? And there's a lot of risks with it. You go back to the Roman example, they went and got slaves. Meanwhile, the real economy for the bottom of the rung kept getting worse and worse and worse. And yet they were seeing more economic positive results by their own metrics, but their metrics weren't measuring from the bottom rung of society. It was measuring just the top rung in the surface level. Like, eventually there was so many slaves in the Roman Republic that like the tradespeople started to suffer as well, and a lot of them went out and became very much the lower rungs of society, even though prior to that they were like, you had tradespeople that created businesses really that would get close to senatorial class. It's not till much later when, they bought up a whole bunch of slaves, and then they had vast, well, relatively sized, in relation to the size of the empire, vast, economic business empires that then pushed them up into the senatorial class. But you could see stuff similar happening here with juicing of the numbers. Like, mass immigration really starts in mass numbers under Trudeau, starts in 2015, even though you see the beginnings of it like 30-40 years ago, of like, oh, we're going to just start cranking these numbers up because it's in tandem with the euro dollar. Oh, the euro dollar starts taking over, the real economy starts suffering. You get the government bond, government debt, wealth siphon thing that I, again, always talk about. We've got real negative GDP numbers. We can't have this, so we will tweak the calculations for GDP, how we calculate this shit, and we'll bring in a whole bunch of immigrants because, again, throughout history, this is what governments do to juice the freaking numbers, to give you a false sense of good. And yet, if we were to talk to our parents and their parents about, the economic mobility that one had when they were, say, 20, each one, if they were being honest, would say, yeah, I had more opportunities than you do. I didn't have to work as hard as you will have to work. Like, that is the honest truth. I have had this conversation with my dad multiple times. He's like, yeah, dude, you got screwed. It's like, yeah, Dad, I know. I can look at the data, and you got screwed compared to your parents too. Like, in my dad's lifetime, all right, it went from um, his, you could have a single parent working and pay for a house, a car, and like 3 kids, realistically, all right? In Canada, by the way, to, well, now you need to have, you know, uh, 2 parents working. You can pay for the house. You can pay probably for 2 cars as well, and you can afford maybe 2 kids at the most. You'll either have to go into debt if you want to do some of the more fun stuff, or you won't do the fun stuff with your kids. Was kind of how it was starting, and now it's, with me, it's like, oh jeez, huh? You want a house and a car, buddy, man. House is off the table. The car, the best I can do for you is like a 10-year-old car. Like, that's how my generation is feeling now. Not saying that 10-year-old cars are bad. Like, a 10-year-old Toyota is probably better than a brand new Toyota, but Toyota is like the exception because, um, I mean, most 10-year-old cars are going to be better than their stuff, but Toyota is like, they have the legendary reliability nowadays, and for like the last 20 years, um, which is fantastic if you can afford one. Um, and then it's like, oh, kids, yeah, how much debt do you want? It's like, to say we had the same economic lot in life is ridiculous, and boomers who say that are so freaking out of it. And it's not so much that asset prices have ramped up, which they have. The problem is jobs and income have not also kept up. So there's a whole problem there. People haven't caught up to that. They think it's just asset prices. And then when you look at underlying stuff, you're like, cool, asset prices have exploded. But, like, have you seen incomes? They're not that much higher. Like, what is it? If you go back 40, let's say, this is now 50 years, right? I believe average income in the United States was like 20 something $1,000. All right. And now you're slightly higher than Canada. Maybe it's 80 is like average income. I don't know if it's that high. So, but we'll just use 80 because it's like a 3x increase. But if you look at like asset prices, you went from like 70 something $1,000 for nationwide for a home. I think it was like 72 something, to like now it's 400 something. And at peak it was getting real close to a 10x return there on average average price of a house, which is ridiculous. So, like, incomes haven't kept up. Like, you can blame asset prices, but like it's an income problem, which is in reality a money problem, which people don't talk about. So, whatever. This is just, me rambling and ranting about just state of the economy. Not that unusual on this channel. Anyways, have a good day. I will see you in the next video tomorrow with, I don't know. Today was, I need to talk about the economy because people are finally catching up, and it is satisfying as hell to be like, oh, hey, yeah, that thing I warned you about like a year and a half ago, yeah, that's happening. That's a problem. It's so, how do I put this? on one hand, it's frustrating to be like, ha, I was talking about that months ago. I was right. But then, it's the, no, I was right. And, people get so much stuff wrong on the economy and just money and shit. Anyways. Sorry, I was trying to read something and then I forgot. I'm still recording. Goodbye. See you tomorrow. Have a great day.